Hi, and good morning. Welcome to today's edition of Market Analysis. I am Giovanni Benacour, operator and educator with Vantage Markets. Today is Thursday, the 22nd, September 22nd. Well, as the saying goes, supply shortages can turn into gluts. We may be seeing that happening within the energy space. Yesterday was probably one of the busiest news days I've seen in a long while. You may have thought the market would have been down even before the FOMC rate decision. Vladimir Putin issued a proclamation that Russia is planning a mobilization of 300,000 additional troops in Ukraine and made some threats of nuclear conflict with the West. Natural gas saw a brief spike before selling off. Brent crude had a similar reaction. And the grades are so focused on harvesting yields at this time of year that a seasonal price increase is to be expected. But volume was normal throughout the session. The question is, does this conflict have any market impacts anymore? When Russia invaded Ukraine, oil prices spiked 41% on the fear of tightened supply, and we are seeing the crisis unfold right before our eyes. Producers started positioning themselves net long in the futures market according to the CFTC's Commitment of Traders report. Trade alliances rapidly shifted to ensure supply of pretty much any major energy source. Abandoned nuclear reactors, coal power plants, and even wood-burning energy resources came back to life in preparation for a rough winter. On the equities front, the market landscape post-Fed day is anything but tranquil. The Federal Reserve's 75 basis point hike was largely expected, but it was Chairman Jerome Powell's steadfast hawkishness in the battle against inflation that upset stock markets. He said, we will keep at it until the job is done. I wish there were a painless way to do that. There isn't. So there's going to be pain, but just how much pain is still uncertain. The Fed's median projections see another 125 basis points of increases to the year end. They also see the Fed funds rate rising above 4.5% next year. It may not end there. Bank of America raise is forecast to a 4.75% to 5% range. The Fed has set the pace, but the global tightening race is far from done, with a flurry of central bank decisions today. The Swiss bank delivered a 75 basis points hike, which significantly brought with it the end of negative interest rates in Europe. It's the first time Switzerland's rates have been in positive territory since 2015. The global tide is definitely turning. But not everyone's getting swept up. The Bank of Japan opted to maintain ultra-low interest rates. In response, the Japanese yen fell to fresh 24-year lows against the dollar, partly reflecting the country's polar opposite monetary path. That was until the Japanese government intervened in the currency market for the first time since 1998. The dollar fell 1.5% against the yen in a heartbeat. U.S. futures turned higher as the dollar strength at least paused following the dramatic intervention. So market calm is a long way off. So with that being said, let's take a look at what we can be expecting for today. So here we're looking at the 30-minute NASDAQ chart. I have the 11,500 as my support. Some people are calling the bottom to be for the NASDAQ at 11,000. We'll see that if that is so. Here we have the S&P 500. I have my support at 3,700. Some people are calling the bottom of the S&P to be at 3,500. Then we have the Dow Jones Industrial. 30,000 is the psychological level for the Dow, support level. Some people are calling that to be the bottom. We'll see. Here we have crude oil. Crude oil has been lingering right around a support level of 83.150, fluctuating below it and above it, but it comes right back around it. Right now, the market is above our support level of 83.150, and we should see the market fluctuate above our support and below our pivot. Here we have Nat Gas. Nat Gas is really holding steadfast to that support of 7.65, and the narrow range or the channel trading and the natural gas. I will continue to see that. Okay. Then we have gold. Gold yesterday from yesterday's news rallied. Um, Looking to come back to 1700, but didn't quite get there. Will we see it anytime soon? We'll see if that's the case. But the market is trading right above our pivot point, right around the 1675 mark. Silver is the one that actually also could be seeing some more bulls coming into it. 1950 was the support level for it, and it's looking to bounce off of that, going back to our 1980 resistance. 20 is the target. Then we have copper. Now, copper itself has been a pretty good news. Copper. If you look at copper, a great copper squeeze could be coming for the global economy. So the recent downturn for copper prices only stands to worsen a coming deficit as this lump discourages new investments for the metal, which is used in EVs and power grids. So that we think, talking about copper, it's used in everything from computer chips and toasters to power systems and air conditioners. So copper has fallen by nearly a third since March, and investors are selling on fears that a global recession will stunt demand for a metal that's synonymous with growth and expansion. So you wouldn't know it from looking at the market today, but some of the largest miners and metal traders are warning that in just a couple of years' time, a massive shortfall will emerge for the world's most critical metal, one that could itself hold back global growth, stoke inflation by raising manufacturing costs, and throw global climate goals off course. So, to see copper around these levels, it is irie. So this keep an eye on copper. Keep an eye on copper. Bitcoin, we see that Nasdaq falls to 11,000. We'll see Bitcoin at 18,000. Then we have the euro, who is struggling to come back to parity. Will the ECB intervene to do so? We'll see that. As long as the dollar index stays so strong, it'll be hard for the euro to by itself come back up to parity. Will we see the dollar index at 112? That is the question that I want to ask, or we're going to find out. Well, that's it for right now. Have a fantastic day.